Hi everyone, my name is Jason. Today I want to discuss some techniques that will help you decide when an impulse is complete. An impulse is a 5-wave pattern and the most common Elliott wave pattern you'll come across. However, before you look for evidence of a completed pattern, it's important to follow the rules and guidelines of an impulse, as well as the concept of the right look. Those rules are: wave 2 can never retrace more than 100% of wave 1. Wave 3 must never be the shortest wave between waves 1, 3 and 5. And wave 4 must not overlap with wave 1. While those rules may seem simple enough, I've lost count the amount of times I have seen one or more of those rules broken. If you're going to apply the Elliott wave principle, it's important to adhere to the rules and guidelines. We're looking at a chart of the dollar Mexican peso, and I want to draw your attention to the fact that I think a third wave is still unfolding, and 5 red waves are not visible. While it may seem trivial that we expect to see 5 clear waves before you can label a completed impulse, I've seen far too many Elliott wavers count incorrectly and try to force a completed 5-wave pattern when there are not 5 visual waves. Each impulse, waves 1, 3 and 5, must also count in 5 waves. When I looked at the subdivisions of red wave 3, it was clear that green wave 4 was part of red wave 3 and not red wave 4. If you look at a chart and you can't count 5 waves with relative ease, then the chances are the pattern is still unfolding. Personally, I like to see the second wave and the fourth wave corrections be of similar size, which is not the case here. As we can see on the next chart, dollar Mexican peso continued lower to complete the remaining subdivisions of red wave 3 and a bounce for red wave 4. Once we can label the fourth wave in place, we can then look for potential targets where the fifth wave will end. You'll notice that I have 2 targets for red wave 5 at 1981 and 1958. A common target for the fifth wave of an impulse when the third wave is the extended wave is equality between waves 1 and 5, so that would be at 1958. However, sometimes the market can drop short of that area, and the fifth wave is a 0.618 multiple of the first wave, which is at 1981. A good tip to help decide when the fifth wave is in place is to draw a trend line between the second and fourth waves. When price moves outside of that area, it can hint the fifth wave is complete. It's also worth noting the size of any rally and compare it to the previous bounces. If an advance exceeds any of the prior bounces, coupled with a break of the trend line, it will be evidence to suggest the fifth wave is complete and a move higher is unfolding. We can clearly see the size of the rally from 1973 was much larger than any of the prior bounces, which indicated that the low was in for red wave 5 and an upward correction was in progress. Let's have a look at another market. We're looking at a chart of the Kiwi dollar, and you'll notice that there are only 3 waves and not 5 waves. So before we can entertain the idea of a completed impulse, we need to see 5 clear waves. So at this stage we expect to see a bounce for blue wave 4, followed by a new low to complete blue wave 5. And you'll notice that we have a target of 6250, the equality projection target between waves 1 and 5. A common target for the fifth wave of an impulse. Having tested the projection target for blue wave 5 at 6250, we're looking for evidence of a turn higher to suggest blue wave 5 was complete. Similar to the prior example, once the Kiwi rallied above the trend line connecting blue waves 2 and 4, and the size of the rally from 6217 was larger than any of the prior bounces, it was evidence to suggest that 5 waves had ended at 6217 and an uptrend was unfolding. Let's recap. Before you attempt to suggest a completed impulse, make sure there are 5 visible waves. If you can't clearly define a correction for both the second and the fourth wave, chances are the market is still within the third wave. When waves 1 through 4 can be counted as complete, look for the fifth wave to end at either the 0.618 multiple of the first wave or where the fifth wave will equal the distance of the first wave. Draw a trend line between the second and the fourth waves. A break of that trend line coupled with an advance that exceeds any of the prior bounces will be evidence to suggest 5 waves are complete. Thanks for watching.